right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I don't ask for much from you guys. I just tweeted out a link to to the Morning Edge. Whenever I do that, if you don't mind tweeting it out, that'd be great. You know, I don't, like I said, I don't ask for anything here. I don't ask you to leave a quarter next to the toilet. But if you guys can do that, I'd appreciate it. Just trying to spread the word about the Morning Edge. Thank you very much. Okay, let's get started with and thank you guys, everybody that's retweeting that. I appreciate it. Let's start with the euro dollar, and first and foremost, so we're going to go there. And oh man, this is day number 2 with a headache. I have not been able to shake this headache. I'm not too sure if it's the way I was sleeping or what's going on. Okay, anyway, here's the euro, and a couple things that I have to note about the euro price action the last couple of days. All right, so here is the euro dollar, and I saw another analyst that referenced this, and I'm gonna say it because I get the analysis to CityFX. I get their analysis, every day. They're looking at the euro dollar that can actually push up towards 118, and basically they're looking for a move like this, right? They're looking for a move like this, right? To stay in the channel. You can see this, obviously this strong channel, which I think the channel is more of a flag pattern on a weekly chart. But notice here, let's delete these fibs for a second. A lot of people keep asking, oh Blake, is that flag a little too long in the tooth? Okay, let's draw it like this. All right, and I'll do copy paste. All right, and thank you guys for all of the retweets. Really appreciate it. Okay, so here's the longer term view, the weekly chart of the euro dollar. So what I'm looking at here is, obviously this is 100% of the move, right? And as long as this is less than 50%, that flag pattern is still in play. So this right here probably is close to 50%. So in other words, the euro needs to start making a downside move here within the next couple of weeks. I mean, because this is a weekly candle, right? These are weekly candles. So we need to start moving within the next couple of weeks to keep this flag in play. I know we've been looking at it for a long time, and it's just taken its sweet ass time, developing. But the fact of the matter is we're still in it. Okay. I've been asked multiple times, are we a little long in the tooth here for the flag? No, actually, this is an optimal time for it to break down. Like now, like within the next couple of weeks. All right. Imagine, 1 week from now, you add another candle. The next week you add another candle. Next week you add another candle. So, I mean, once we get about another 2 to 4 weeks out, it's going to start getting a little long in the tooth. So the euro needs to make a move soon. Now, CityFX, they talked about the euro has the potential to go up to 118. And it's true. I don't disagree with them. I can't say that I can sit here and say I disagree, because I don't. It totally is possible. However, here, let me move that a little bit. Okay. However, one thing that you may have noticed about the euro dollar, about this move that we've seen here, is the lack of bounce from this fall. We had a couple key developments in this movement. So let's talk about why this move was so critical last week. Why was this rejection so critical? Well, the rejection was so critical because if you take the high way up here, that spike high, remember that people were, the stock market was down 1,000 points, the euro rallied, the pre-market. Remember, the Dow futures are down 1,000 points. The euro just spiked up like that, okay, from the quote-unquote squeezing of the euro funding currency. Okay, ever since then, We rejected it, the 618, all right, here, first move. Second move, not only did we reject again, but we did a false breakout, all right. You can see we rallied, false breakout, hit the 618 again, and then reversed. Now what's key, and let me remove this because we don't need that now, and let's get rid of this for a second because we don't need that either yet. What's really key development about what we're seeing here is the lack of ability of the euro to rally. Okay, so I'm going to grab the pen again. You notice how we fell. We're at a 38% retracement, okay, and it's just a very shallow retracement, shallow, okay. When you get a shallow retracement like that, the risk is that you get a continuation lower. Okay, so now let's stop for a moment and think about what's happening tomorrow. Tomorrow you got the ECB. I read this, and I don't agree, but I read it. 80% of economists think that the ECB will step up their quantitative easing efforts like tomorrow. So expand their monthly bond purchase, asset purchase program. First of all, I'm trying to figure out what the hell they're going to buy if they expand their purchases. But so I think it's a little premature, frankly, for the ECB to announce that they're going to either they might expand the program. I just don't know if they're going to expand the length of the program. It's because remember we still got out till September 2016. So you're talking about another 8 or 9 months of bond purchases that the ECB is looking to do. At the same time, you know, no central bank has done quantitative easing without extending out quantitative easing either. So, you know, if the ECB with all the problems that the Eurozone has at the moment, I would be very surprised if the ECB doesn't step up quantitative easing or extend it at some point. I just don't know if right now is the time. But apparently 80% of other economists believe that they're about ready to, so I don't, you know, I'm probably wrong. But if I am wrong and the ECB does step up bond purchases, well then we're looking at a possible flag pattern that will take us down below this support in the next 24 to 48 hours, which makes sense to me technically. So technically it makes sense. I'm still wrapping my head around the idea that the ECB is really going to do that tomorrow. But what I will tell you is we've had a very rapid fall in the euro, very shallow retracement, and it really does open the potential up, okay, open up the potential for more downside, okay. So what we've got here is we've got a possible pennant formation, and if it plays out, you know, let's fast forward into tomorrow. If it plays out, you know, we're looking for maybe a move back down towards 112 or so. Now, obviously, we're going to have really key support down here. So really, really critical support in the euro dollar once we move down here. I got to redraw these lines because they weren't perfectly drawn because I drew them on a weekly chart earlier, but let's do it like this, like I had it, okay? Let's remove that. Copy, paste. There we go. That's basically what we're dealing with as far as the euro goes, okay? Now we have this little flag pole, looks like this. Oops. Looks like that. Okay. So going back to the 4-hour chart, I think this is a possible move. Okay, now that doesn't mean it's going to happen. I'm going to remove it right now. That's something we'll have to revisit tomorrow, depending on what the price action is today. But again, what I wanted to reference regarding the euro dollar is that this is a shallow 38% retracement. That's all the euro's been able to muster thus far, is a 38% retracement. Okay, that means today that high is very, very important for bears, okay? And obviously, if you're bullish the euro dollar, you want to see that level scaled, okay? So that high is at 113.86. I'm going to write down 113.85. Really key resistance today, 113.85. Key resistance. Now, support, and it's not too far away. I mean, if you look at it, you're like, wow, that's, you're only talking 35 pips. Right. But we also are dealing with very tight trading ranges the last several days. You know what I mean? So yeah, we have a 43 pip trading range, daily range thus far in the euro dollar. So to me, it seems like, okay, yeah, getting us to rally 35 pips from current levels might even be kind of difficult in today's market. Obviously, the support is down here at 113. So even if we start breaking overnight lows, I wouldn't get super excited, even if we crack new lows overnight. Okay, so 113 is support. And frankly, I'm not expecting us to break either one of those ahead of the ECB. But we may. I mean, again, there's not there. What what data do we have that's coming out right now today that suggests that that we're going to get a big move today? There's not a whole lot out there. There's just not. So anyway, let's go over to the cable. Here's the pound dollar. The pound, we rejected the support. Actually, rejected. I have to say respected the support that we had written last night or yesterday. Okay, at 154.15 written down. We went as low as 154.14. So we were a pip off yesterday. But see, what makes this even more important now is yesterday when we were talking about it, and let's go back to yesterday. So yesterday, here we are. And by the way, I'm still short the pound. I still have a short. My cost average is 154.83. I'm still sitting in it. Been sitting in it. Yesterday, when we were here, we said, okay, if it breaks 154.15, don't expect too big of a move. We might get a move down to 153.80, but ultimately, I wouldn't expect too much. But because we came down here and we held it again, okay, we held it again. If this support is broken, well, let me stop for a second. Okay, we're going to break out. We're going to break above 155.10. Okay, 155.05, but I write down 155.10. We're going to break here or here soon, and when it happens, we're going to get a nice move. We're going to get a nice 100 pip move either direction. That's the great thing about where we're at right now in the cable. Now, I'm obviously short, so I'm expecting a downside break, but that doesn't mean we can't get an upside break. This move out of this range right here will produce a 100 pip move. You just got to be ready for, ready to go either side. Okay, so you can, whoops, that's not what I wanted to copy. I wanted to copy, paste right there. So there's your breakout, and that's what it's going to produce now. And I'm pretty confident of that. So now I just got to figure out which side we're going to break. Obviously, we have a downsloping trend line right here that's been in play the last couple of days. We haven't been able to close our wicks above it on a daily candle. So 154.15, 155.10, breakout lumen. Okay, we're in a range, but we got a breakout coming. Breakout cometh, and it cometh soon. All right, let's go take the Swissy. So Swissy. Now, I don't know if you guys saw this last night, but the Swissy and the Euro Swiss, Pound Swiss, all had a coordinated move. So here's the Dollar Swiss, Euro Swiss, pound Swiss. Some people speculate that that's what held up the pound from falling. Pound Swiss. All Swiss pairs moved, spiked up last night. Now, obviously, you start sniffing around and thinking it's Swiss National Bank. It probably was. And that was a warning to the market that says, basically, if the ECB, ECB extends quantitative easing, we're going to intervene some more. So that's that's exactly what that was, in my opinion. Speculation, obviously, without actually knowing, but I would assume that is it. So with that being said, you have to start realizing that the Swiss National Bank is active in the market. All right. Now here's the Swissy, and you guys know that we've held the 618 retracement. Okay. We're trying to probe above the resistance that we had written down yesterday. That resistance that we wrote down yesterday was 95.80. We may have wrote 95.85. You guys will have to tell me that, but 95.85, I believe, was the level we wrote down yesterday. But Daryl said I needed some Swiss for my vacation. That's what happened. Oh, I knew it was you, Daryl. I knew it. This trend line, which is the yellow dotted line that we've had here for the last week, horizontal breakout point. Okay. Horizontal support. 38% fib retracement. Any dip down towards 129, you got to be a buyer, because the risk reward to be long down here is much greater than to be short. Okay. So I don't know how the BOC is going to spin today. I would not be surprised if he tried to give his meeting a more positive spin, because he wants to, let Justin Trudeau know that he's in charge, and they've got a handle on things, and they can pull through, and what they've been doing is working, and again, it's all about the I think politics will actually play a little bit into today's BOC meeting. I think there's a risk of that. But once again, the market will see through it. But the initial jolt would be stronger Canadian currency. Just got to be able to buy it on dips. All right, now if that happens, I'm going to say I'll reiterate: 129.15, probably not a bad place to be long. 128.75 would be even better if we can get it. The 78% retracement. But I'm going to write down 129.15 today as being support. 1.2915. That should be support. Resistance, okay? Resistance is going to be at 130.50. If we break that, if we break this right here, okay, we're probably going to surge a lot higher. And then we'll have this, inverted head and shoulder pattern in play. But 130.50 has to be taken. So expect volatility, and this is where it. 50. This is where I expect volatility today in the market, because there's not a whole lot else happening at the moment. Okay, when I come back from break, if you guys are new, we take a break every 25 minutes. So when I come back, we'll do the Kiwi, the Aussie, the dollar index. We'll look at the peso, Swedish krona, Norwegian krona really fast. Any questions that you have, I'll be addressing after that. So I'll see you back here in a few minutes. Don't go anywhere. Thank you all for being here. Be right back. All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. So let's get started again, and let's go over to the Kiwi. So the Kiwi just continuing its downside move last night. Now what we cracked, and this is pretty important as far as I'm concerned. You guys remember the analysis yesterday? We after the dairy auction results, we cracked through support. We broke 67.80. That spurred a move higher in the pound New Zealand, which many of you guys and gals are long, which is great. And and then the Kiwi continued to break lower. Now obviously we stabbed lower to here, and we got to figure out why we stopped there. So my opinion is we might have a little harmonic pattern going on, but I got to find out why that's being supported at the moment. So let's remove this. Actually, we're going to remove a lot of things. I'm gonna redraw actually a lot of stuff here. Okay. So let's go from the low, the actual trend low, to the trend high. Okay. Notice we're not even at the 38% retracement. As a matter of fact, we're sitting below the 24% retracement, which suggests to me that really we will eventually make our way down here. This would be your short target price. I am still short the Kiwi dollar. I added a little bit yesterday. My cost average is at 67.92 right now. Okay, that's where my cost average is. I added slightly to it yesterday, not a lot, and it's still not a big position. It's not even half size position for me. But I am, I'm also short the Aussie dollar at 72.60 from Friday. I'm long the dollar Canadian yesterday at 129.53. I'm up 48 pips, but they're all relatively small positions. So they're not, they're not even half-size positions for all of them. But I'm staying and maintaining short here with the Kiwi at this stage in the game. So 38% retracement seems like a likely target, which comes in right now at 66.50 basically. Okay, 66.40, whatever the high is here. But I want to see why we stopped, where we stopped. So let's go over to the 60-minute chart. See, even this move, you're talking about, we blew past 161% extensions because that stalled us there yesterday. Then we continued lower. Relative strength had to moderate a little bit, especially after being pretty oversold in Asian trade. So we've done that. I think for today, any move up to here is going to be very, very key resistance. 67.80. If we can make it up there, I doubt we're going to make it up there. But if we do, that would be the Greek gods hitting or singing to you right up there at 67.80. Do you guys know what the Greek gods sound like? Just curious. Because if you haven't heard them yet, they sound a little like this. Oh, the Kiwi dollar hit 67.80. And it hit key resistance, and this is a good short. Oh. Now, for those of you that are new to this webinar, I just lost about 30 listeners. That sucks. I got married in Greece. I married a Greek woman, and I had to become Greek Orthodox in order to do so. And I spent many of days and many Sundays in Greek churches, so I know exactly what they sound like. It's an Orthodox church, man. There's nothing like it. The singing that goes on there. But anyway, no, I always joke around though. If the FX gods are speaking to you, if you can make all the way up there, you'll hear them sing. And that in this case, if the Kiwi gets up to 67.80, that'd be a great short. I think. Getting up there though is going to be tricky. Support right now is 66.45. That is a 38% retracement. So 0.6645. Really key support. If you want to be on the long side of the Kiwi, that's probably a really nice place to be on the long side right there. Okay. Now I'm short. I'm hoping we get down there because I'll cover down there, but that would keep us having a higher low intact if that happens. Higher highs and higher lows. So that would keep a higher low. So that would give us a chance of maybe building some sort of triangle formation in the future. I'm looking way ahead into the future, which I try not to do, but if we can hold there, that'll be constructive for bulls, right? I know you're looking at right now, like how could that be bullish if we come all the way back down there? It's because we'll end up holding some major lows if that happens. Anyway, just a thought, but we are in a range. Let's go over to the Aussie. So the Aussie joined in the short commodity currency party last night as we broke out of this triangle that we were forming. A lot of people speculate that this might be a flag. Well, if it was a pennant, it's no longer. If it's a flag, we have some work to do, which means we can come all the way back down to, basically 71, 75 before turning. Now, if that's the case, that'd be a 50% retracement to get us all the way back down towards this trend line support by the time we get there. We are at a 38% retracement of the entire move. That's key. That comes in at 72.10, and our low, hey, 72.10. How important is that? So if we break below 72.10, that's a problem. That means the trap door is going to open on the Aussie. Okay, so that's pretty important support right now. Resistance. The resistance will be resistance, we'll have some very near-term resistance right here at 72.40, but really resistance will be up here around 72.75. That'll be key. 275. And yes, we are in a range, which really sucks. I mean, it's horrible when we're in range environments all the way around, but I can't control that. You can't control that. It is what it is, and at least we can identify it and say, okay, we are in a range, obviously, almost on everything, so you got to be very careful trying to trade breakouts, whether it's long or short, because you're dealing in just a real tight range environment all the way around. Let's go ahead and take a look at the dollar index. Okay, here's the dollar index. I'm going to pull it up really quick. Here it is. And we're going to go to an hourly. And you can see how the dollar is just really poised. We still have, and what it could be, I'll just use my drawing tool here. We still have what could be a inverted head and shoulder pattern. We just have to break this 95, whatever it is. So that resistance right now is 95.05. Really, really quick. Here's the thing, guys. If we break 95.05 in the dollar index, if that breaks, you are aware at that point in time you do not want to be short the dollar. I don't care what you're trading. Just do you know that if that breaks out, you do not want to be short the dollar, because we're probably going to get a pretty damn good squeeze. All right, so 95.05. Support is down here. It's going to be whatever the previous. Yeah, it's going to be 94.60 roughly. Okay, 94.60. Okay. Now let's take a real quick look, and then I'm going to answer your questions. Here's the peso. Peso is getting a nice squeeze. Now remember, I'm going to, let me stop and talk about what I talked about yesterday. This has to be alarming for stock market bulls. When you have emerging market currencies like, hold on really fast. So when you have the U.S. dollar, Mexican peso, when you have the peso as weak as it is, that suggests to me that the market it has the potential to squeeze higher, and we have the potential of seeing some risk aversion in the market whenever you see the emerging market currencies weak like this. And notice how the U.S. dollar, Mexican peso is grinding higher, even though um, the stock market is near its highs of the session. You go, well, what do you mean risk aversion? You know, we're up 86 points on the day right now. What do you mean by risk aversion? You guys know, and here, let me grab this chart here. We're up, and this is a 4-hour chart of the S&P, but you know, we're up against really key resistance. And given the fact that this peso is showing weakness and we're seeing the dollar grind higher against the peso, that tells me that the Forex market's sniffing out some risk aversion. So even though we haven't sold off yet, even though we haven't reversed yet, I would be very careful being long risk with the US dollar Mexican peso doing what it's doing here. Let me I don't know if you know, trading wise, as far as the peso goes, I don't know if there's anything I would do right now. I don't trade the peso as it is, and I'll be trading it, you know, once we get switched over to gain capital over the next week or so. I'm looking forward to trading some of these exotic currencies, but I don't trade it as of right now. And even if I could, I don't know if I'd be trading the U.S. dollar Mexican peso at the moment. Yeah, there's no reason to really short it at the moment, but I don't think I'd be chasing it to the long side here either. All right, here's the Norwegian krona. Now the Norwegian krona is slowly grinding higher as crude oil is moving lower. Something to keep an eye on. Just as we've been pointing out, the Norwegian krona is going to struggle once we get up here. So I'll write it since we're mid-range. For those of you guys that trade it, 822 to 825 is going to be. It's going to be some pretty key resistance here. Hold on. Yeah, so if we can, you know, for those of you that want to short it, maybe I'll move back up to, you know, 825. Then obviously if you want to be long, you know, do it like that. But you know, since we're mid-range, I don't know if there's a whole lot to do with it at the moment. But just keep an eye on the Norwegian krona right now over the next couple of days. Here's the Swedish krona. Now this is key. If you want to know if the dollar is about ready to plunge higher or rip higher, let's put it that way, 833 is resistance, and the US dollar Swedish krona really close. So if the US dollar Swedish krona breaks 8.3300, then it's going to start breaking higher. Now remember, this is a huge range and a very bullish, you know, very bullish trend. We're at the bottom of the range. We break higher and we're going back up into the upper end of our ranges. But that will also suggest the dollar is probably ready to move higher against other things too, like the euro is about ready to fall or whatnot. Support for the Swedish krona. guess right here. I mean, you know, eight and a quarter. So, but keep an eye on the Swedish krona, man. That thing breaks out, and it's gonna be a mover. Okay, your bias chart is ready and it's done, so you guys can take a picture of it. If you're new to the morning edge, and you know, like you know, we do this every day. We build out this bias chart every single day, and it you know when you come here, what we go over the same analysis, over the same majors, using the same indicators, day in and day out. And what I try to express to new traders is, listen, you don't you don't have to overcomplicate things. I've been trading for 20 years, over 20 years, and or I've been in the markets for over 20 years now, and um, I what I've found is that consistency breeds success. I don't need to, you know, look at this indicator, that indicator. I don't need to tweak things. I really just follow the same setups every day and every day, you know, and it's that consistency of finding what works. Now, I'm not saying that what I do works, but if you can incorporate some of the consistency that of some of the things that we do here into your own style of trading, um, you know, hopefully that'll help you become a better trader, a better investor in the future. Okay, but anyway, there's our bias chart. Let me go start answering some questions. Jose, I'm not putting